The European energy crisis is interesting because you're literally seeing hyperinflation in the energy sector. So people 60 days ago had bills that are quite literally 10 times more now. So if your energy bill was $200 and it went to $2,000, how long can you stay solvent in that environment?
Hi, I'm Kaiser Johnson with Liberty and Finance, letting you know that as brokers for Miles Franklin, we can help you secure your future with precious metals for personal delivery, vault storage, or your IRA, with some of the best prices in the industry and privacy, security, and personal service that no one else can match. Our number for all orders and questions is 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance, and co-hosting with me today is my brother Kaiser. Kaiser, thank you so much for co-hosting with me today.
It's my pleasure. Thanks for having me.
And also with us today is our good friend Travis Leicht from Leicht Capital. Travis, thank you so much for joining us today.
Great to be with you.
All right. Well, we wanted to have you on today and also discuss preparedness. The last time we had you on, we were talking a lot about financial preparedness, but there are more aspects to preparedness than just the financial aspect. And right now, something that you're experiencing there in Florida is Hurricane Ian. What has that been like recently?
Yeah, so Hurricane Ian came right over our house, right over our town. We're in Sarasota, so it technically made landfall a little south of us, but we're about as direct of a hit as you would want to be. Definitely had 100 plus mile an hour gusts, or there was a point where it was almost a Cat 5 as it was coming on shore. And I just trees, power lines, all the things that you would expect, basic infrastructure, pretty much demolished everywhere you look. So it's been interesting to see neighbors helping neighbors and people who had prepared for the storm, who thought that the storm was a possibility. We live in a unique town where it hadn't been hit by a storm for about 100 years. And I think the last time it was hit was 1927, direct hit or a large hit where it actually went over one of the barrier islands. So there's a kind of a myth in this town that the Indians, so the Native Americans, had given it a blessing. And whenever people move here, it's like the first thing that people share with each other. So in many ways, there's a stigma in Sarasota that people don't really prepare because nothing really ever happens.
And what are you doing to prepare, I guess, for what is happening right now? What are some of the preparedness steps that you've made?
So I built a property with anticipation of being off grid, or as off grid as I could be. And being off grid is more expensive than you would think. So our property runs on a backup generator. It's not unbelievably fancy, but it's all wired in and fuse boxed in and everything like that. And the fuel to go with it and all of those things that may go. So we can basically power up, run the well, and just live normally, with the exception of we have very high energy costs when that occurs because you're just burning fuel all the time just to keep everything going, like refrigerators and everything like that. So we had sort of set up originally to do that. Not everyone in our area has done so. I do live in an area where it's a 5-acre properties and larger. But we're kind of the odd ducks. There's a few neighbors that have set up in this way. Most of them, oddly, have not. But they are now in the process of doing that because they're realizing we're kind of on the outskirts of town. We'll probably receive power back from the grid last because our population density is so small. So the higher density population areas are higher priorities, obviously. And so we're sort of on our own. So, I mean, from our perspective, we've always had the dry goods. We've always had generator fuel. We've always had those things. We've always paid to maintain them. That, you have to cycle through. If you're holding fuel, you have to cycle through it. You can't just sit on it forever. So we've always just lived since 2016, because I had my crisis moment in 2016 where I woke up and realized I want more sovereignty, just personal sovereignty. Realize that it's probably not a 100% possibility, but 90 is an A. I will take 90% sovereignty if I can achieve it. And it's a goal to work towards. So we've always had those type of things as far as a well being on property that we grow maybe 20% of our calories at this point. Goal would be to grow substantially more and look like you gentlemen, but we're getting there. We're moving in that direction.
It seems like we're seeing the hurricane, hit Florida, which you are experiencing, but also in Europe, we're having a major energy crisis. And I guess both of these things just kind of bring back to mind that it's important to be prepared. So if we could get your take on the European energy crisis that we're seeing right now, and also some other ways that people should be looking to prepare right now.
Yeah, so the European energy crisis is interesting because you're literally seeing hyperinflation in the energy sector. So people 60 days ago had bills that are quite literally 10 times more now. So if your energy bill was $200 and it went to $2,000, how long can you stay solvent in that environment? Or if you have a business and you have 12 employees, maybe you have a cafe and your margins are thin to begin with, how long can you realistically keep the cafe open, especially on off hours? Or how long can you operate like that before you just close the doors and allow your 12 employees to be unemployed, to go seek employment elsewhere? And can you run an industrial economy without energy? And it's absolute insanity that they're attempting this. But maybe many years of energy policy are somewhat summed up in the European EU energy crisis story, where you're seeing, energy is life. Doomberg is famous for saying this, and it is absolutely life. When you go through an environment where you no longer have energy, like we are in this situation, we're hopeful to get it back, and we're hopeful to get it back we're expecting it to be relatively normal cost. But you imagine running an economy where your base level of input has increased tenfold, whether that be from the trucks that supply the stores or the electricity that keeps the refrigerators on at the stores, or the energy that just powers people to and back from work, however that may be. Energy is literally the base unit of a society. And so what we're seeing over there is unfortunately 50 years of energy policy wrapped up into a Nord Stream pipeline photo. That's ultimately what we're seeing. We're also seeing what occurs with a society that is highly centralized and dependent on a third party. And I think as a world, certainly in the US, but generally just all around the world, we have been in a period of time where it has been about making things faster and cheaper and in more abundance, which has driven a consumer-centric economy and philosophy, and that's woven itself into the moral fabric of our cultures at this point in time. It's starting to become evident. And I'm not saying that material goods are a bad thing, and I'm not saying that consumerism is necessarily a bad thing. You obviously need consumption at some level. But what we are seeing is that our priority has been to specialize instead of generalize. So instead of us being a jack of all trades, we figured out that it's better in a specialized economy to trade with everybody and to become an absolute specialist in one thing, two things. The people that really crush it as far as their labor are probably people that work on just feet, as far as a bone surgeon, or a specialized heart surgeon, or someone like that just does that. Not necessarily a paramedic, a jack of all trades, but just a heart surgeon. Which I'm not advocating that that's a bad way to set up your own individual. Well, I'm not saying it's a great thing, and I'm not saying it's a terrible thing, but we are definitely seeing a move to where people are possibly waking up and realizing we need to build additional skills, and we probably need to decentralize some things, if not all things, so that we have a more sovereign society and a more robust society. So when storms come, like ours, or just storms in life in general, we have a little bit stronger of a foundation. And I don't think that was obvious in 2019 whatsoever. But I think, post 2020, coming out of 2020, we're seeing the effects of the supply chains. We're seeing the effects of money printing or currency printing, because I wouldn't really consider fiat dollars or currency to be money, but we exchange it. So in a way, it resembles money. But we're now changing that to a point where we're increasing the supply of that, but we're decreasing the supply of actual goods. So we're in this inflation narrative, we're in an inflating time. And the narrative at this point in time is, well, if we increase the interest rates, we'll kill off the demand, and demand and supply will work. Well, essentially what we're doing on the chart is, if instead we're bringing down supply and we're bringing down demand, and we're bringing down supply and we're bringing down demand, and we're just shrinking the quality of life. And maybe not quality of life, but as far as what we can consume as consumers and produce as producers, we're bringing it down. And I think that from here, we're probably in a period where we'll see more centralization, especially as people have become very reliant on the system. And I think that people will become uh, very protectionist towards that system, as odd as that may sound. If you're very reliant on the system, you're going to tote the line. But I do think that we're reaching that peak centralization point, and I think things may break from here, and we may find ourselves in a world where the option and the solution is decentralization. And if that occurs, I think free markets are going to impress a lot of people. A lot of people.
Travis, that brings up a couple of things you said there just at the end, bring up some interesting kind of thoughts that I hadn't really thought into before. Whereas in the past, maybe it worked too, because we didn't have such this height of the information age where you can find out exactly what demand is, what supply is, and what you think it ought to be in the moment, and all these producers and shippers and Amazon and all these things doing just in time preparation, that maybe it worked in the past to try to kill demand, and supply would outpace it, and then you could catch up where it met a good point. But it almost sounds like you're saying that's not really possible anymore in a certain way.
Yeah, it's not possible because we're living at a point where I think we're in de-globalization. And I'm picking this up from a gentleman named Peter Zeihan. I believe I'm pronouncing his last name correctly. He wrote a book recently. It's his fourth bestseller. It is a New York Times bestseller at this moment. He's where I think it's the end is just the beginning, or the World War III is just the beginning, or the end of the world is just the beginning, something like that. But he put out basically the world order that we live in now was created in 1944. And that was after the US knocked out all their competitors, for lack of a better way to say that. I mean, the Japanese were just not going to produce anything. The Germans were not going to produce anything. The Brits were not going to produce anything. I mean, their factories were completely bombed. Meanwhile, the Americans were just steamrolling. I mean, we were amped up. We had most of the world's gold. We were the biggest creditor nation. We had a huge population. A lot of things went right for America in 1944. We created the world's reserve currency at Bretton Woods, which was essentially, let's use gold. But you know what? Let's not use gold, because dollars are so much better than gold, because dollars will give you yield on a treasury bond. So why would you hold gold when you could just hold dollars and get yield on a US treasury bond that are paying pretty nice interest rates? And so the world said, great. Yeah, that's great. And it's redeemable at the government level. And that worked completely fine until 71. And so Peter argues that created this new world order where almost anyone could trade with anyone, because the US was the police force of the world. And so you could ship tea from Sri Lanka to Britain, or ship it to India, or pick up spices in India and take it over to the Caymans and then trade it into Miami. And you could have pretty good assurance that your cargo ship wasn't going to get hijacked or anything was going to be a problem, as it would have been previously. And so therefore you could literally specialize. I mean, Sri Lanka specialized in tea and tourism. That's what Sri Lanka produces, and they super specialized in that. And so we saw nations start to specialize. The US specializes in consumerism at this point in time, because we had to dollarize the world, and that's what broke the gold standard at that time. When you have the world's reserve currency, you have to continue to make sure that you're creating enough of it to continue to dollarize the world. And so I think that we're in this spot where I subscribe to this idea that we're now seeing de-globalization, where nations are going to protect, where we're seeing the destruction of global trade. This is probably going to continue along with global currencies as they're buying less and less. Inflation is going to continue to go higher and higher, regardless of what they do with the interest rates or the currencies, because when you have to onshore the production of the iPhone or something like that, or you just can't get aluminum because it comes from Russia, and today it ripped 7.5% to the north side. I mean, your tinfoil is going to get expensive. I don't care what you do with the interest rates. Tinfoil is going up at least 7.5%, unless they produce less of it. And therefore, there's less economies of scale. And then maybe it's going up to a factor of beyond with an exponent of 7.5. Maybe it's going up 7.5 to the second exponent. I don't know how these things work, because as things don't perfectly scale up and things don't perfectly scale down, we're going into the storm now. This is not, the road is out. There's no more road to kick the can. We're now entering into the forest, and it's going to be a little rough.
Definitely. And I guess if we could then wrap for our viewers your perspective on, we're definitely going to see continued high inflation going forward. And it seems like your perspective is that, regardless of what the Fed does, inflation is more complicated than just, raising interest rates and cooling that off. It's a lot more complicated than that. So if we look at what's happening right now, we talked about last time, taking back your sovereignty by owning physical precious metals. What are some other final tips you'd provide for our viewers for ways that they can prepare for this inflation to come and possibly further crises, as your experience right now with the hurricane?
I mean, that's a deep question. The biggest crisis we have coming at this point in time is a currency crisis. And no matter where that goes off first, we're going to feel the effects of it all over. You don't wake up in a world in 2023 where Germany is literally frozen out, no running water in the homes, no production of Mercedes, no affordable production of BMWs, etc., and not get a severe consequence of that all around the world. I mean, you don't take out a G7 nation to negative GDP and skirt by like it's going to be okay. The consequences of this are they typically will print. And that's what they said they will do with the energy, quote, crisis that they've created themselves. They're going to cap it at 2,000 euros, whatever that means. And they're going to essentially pay people's electric bill or print it or give them stimmy checks or whatever that may be. So what they've chosen is they have a decrease in the supply of energy at the base level, and that they are going to increase the supply of fiat currency units. That's inflationary, regardless of what they do. What we need to prepare for is the negative interest yielding bonds. Those people that are invested in bonds that are getting a negative real rate are going to shift, and they're going to dump their bonds. We are seeing this on Monday morning when the British pound basically behaved like a cryptocurrency, where it dropped 6% in 12 hours. And the British bonds started to dump. British pension funds all of a sudden needed bailouts, like emergency, things started to occur. The British government then came out yesterday and said, we will print unlimited to keep the bond market afloat. And so essentially what they've chosen to do is sacrifice the currency. I think that we've got to be prepared for a currency crisis of one of the G7 nations, whether that's the euro, whether that's the pound, whether that's the yen. And it will only strengthen the dollar. And as it strengthens the dollar, all things that are priced in dollars are probably going to be under pressure. Silver, gold, oil, etc. These are opportunity for us dollar holders and us that earned capital in dollars. But the next thing that's coming is a currency crisis. When a currency crisis comes and the bond markets literally blow up, and you'll know it because the 10-year yields and all those other things are going to spike. Gregory Mannarino has been great on this. But when that occurs, and you saw that on Monday over in Britain, cash is going to move. And when cash moves, you want to be where cash is going. So you want to think about where cash is going, and you want to be sitting there. But you also want to think about things might not be operational that were operational a week prior to that, like the banking system. And that's a real thing. If your bank no longer can clear, or your credit card processor can no longer clear the transactions because the underlying assets that they hold are now devaluing or rapidly devaluing, there's going to be a freezing of the system. And this is going to happen. And so when this thing freezes, the average guy is not going to see this coming. And they're going to beg for the government solutions that were caused by the government solutions. And it's our role to take people like Milton Friedman and others and try to transfer complex subjects into simple subjects, because the answer here is decentralizing everything at all levels. But the inflation, until things settle out and find a new equilibrium, and I'm skeptical if they will by the end of the decade. I would say by the end of the decade for sure. But in the short term, 1 to 2 years, probably not possible unless they destroyed enough demand to meet supply. And you would be looking at like a 1930s event to destroy that much demand. The demographics suggest that will happen anyway. That suggests that's what happened in September of 19, is that we ran up against a demographical wall and it showed itself in the repo market.
All right. Well, Travis, we really appreciate your time today. If we can share with the viewers where they can find you online. I know you have 2 YouTube channels out there, and any last thoughts you had for our viewers.
Yeah. So YouTube channel, Leicht Capital. We're talking about finance and economics. And then On-Site Trav, we're talking about social things, political things, lots of homestead content, things like that are over there. Last thoughts are, this is an opportunity. When storms come through, they're necessary. When forest fires come through, they're necessary. We always want to delay them. We always want to push them off. We always hope they don't occur on our watch. But this is how space opens up. This is how opportunity opens up. This is how assets change hands. This is how new things are created. This is how we evaluate what's important, what's not important. This is how we heal. But I would absolutely anticipate at some point in time, just like a hurricane running through your town, the ATMs are probably going to be dry at some point. The Home Depot and Walmart are not open at this point in time. The gas stations are not open at this point in time. Prepare for turmoil, but in that is the opportunity. And any excess wealth that you may have built up to this point that you don't need to put into food preparations. I don't think you need to go crazy, but you need to have enough to avoid the crazy 30 days, 60 days, 90 days. But beyond that, you're going to want to store it in a storehold of value that is always going to buy you one iPhone or one setup, whatever that may be. It'll always buy you the same amount. And so you're going to want to store it in that, but that is your base and that is your excess. So I hope that that's helpful for people. It's not like it's not a doomsday thing, but this is going to be real. I mean, when you're not going to have a failure of the EU this winter, and they literally have no energy and or barely any affordable energy in Europe. And then the British pound doing what they're doing, and the British government saying, we'll just print until we just can't print anymore. You're not going to have that around the world without some severe turmoil and some pain. And likely some of that capital is going to come to the United States. And that's probably also going to be a demand on United States resources. And so that'll be inflationary too. If you want to build microchip factories and get them out of Taiwan and build them in Arizona, it's going to be a demand on concrete and rebar and labor and machines and construction workers. And so these things are going to go up. But for the millennials, the Gen Zs, the Gen X, this is your opportunity. You have baby boomers leaving the workforce. You have the world is completely on fire in many aspects. And from this, new things are going to be built. And many of the people listening are going to be the people that build those things. And I'm optimistic that one of the things that will be built on this will be a sound money economic system. And I think it's going to derive from out of necessity, but I also think it's going to derive because all the people that have been preparing for this event have been preparing by stashing away sound money. And sound money is an interesting thing because when the base layer, the base unit stays the same, stays consistent, things can be built on it because data can be transmitted decentrally without anyone saying what it is. No one needs to price fix. No one needs to supply fix when the base layer stays the same, when the scales and balances, if you will, stay the same. I think that we're going to reach that point, but it's going to be rough. And obviously those assets are going to have to revalue to squeeze in that much economic activity. You're not going to have gold at the current market cap that it has, or silver at its current market cap, and rebalance a global trade system that will probably most likely be based on gold. There's some variation of gold or energy, because most of human history has been based on gold or energy. I would say that previous to 71, definitely gold. Post 74, definitely energy, but gold was still the base unit and it stayed within a range. That range has been broken. And I don't see any fixes in the short term.
Well, I think it definitely is, as we've talked about before, important to take back our sovereignty in many ways, especially, first and foremost, holding physical precious metals to protect our finances. But also there are a lot of other ways, as we discussed today. And people, again, can find you at Leicht Capital and Onside Trav. We'll put the links in the description of this video. Travis, once again, thank you so much for your time and God bless.
Absolutely. Thank you, guys.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.